How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, what a heck of a handful of days it's been in regards to the stock market. I mean, we've been up, down, left and right, and everything in between. My personal account is actually down by $252.02 since my last video, leaving my account sitting at $83,951.01 as of today. However, as the long-term value investor, right now is the opportune time to pick up high quality long-term investments, which is exactly what I've been doubling down on this past week. I want to go ahead and share with you the 3 stocks I've been doubling down on. Now, just before we actually get into today's video, make sure you go ahead, tap on that thumbs up button and help me grow this channel. If you haven't done so already, go ahead, make your way over to subscribing to the channel as well. I'd certainly love to have you on this journey with me. Now, YouTube, let's go ahead and dive right in. I want to start off today's video by just sharing with all of you a good quote from Warren Buffett, in that it's best to be greedy when others are fearful and fearful when others are greedy. Now, what that ultimately means is that while the market is in an incredibly volatile state like right now, and it's full of fear and uncertainty, this is the most opportune time for investors to get invested into high quality long-term stocks while they go on sale. Now, that is exactly what I've been doing this week. I've doubled down on 3 stocks. And most importantly, each one of these stocks I not only see as long-term value investments, but consistent dividend payers that are not only going to deliver through on those dividends, but an ROI through their value of the stock increasing over time, which ultimately now leads me to the very first stock I've doubled down on, which is Stag Industrial, ticker symbol STAG. Now, Stag Industrial is a REIT, a real estate investment trust. It was founded back in 2010. Since their founding, they've amassed a beautiful, diversified portfolio of 517 properties spanning across the United States. Now, they're primarily focused on the acquisition and operation of industrial properties, from warehouses to distribution centers and the alike. And as of recently, just given all the volatility, their stock has actually fallen from around $48 per share down to a nice $41 a share. That's about a 14.5% discount for the long-term value investor to pick up Stag Industrial while it's currently discounted, which is exactly what I went to go ahead and do this week. I picked up 4 more shares of Stag Industrial for a total of $162.96, now bringing my portfolio count of Stag Industrial to 20 total shares. Now, I'm just looking into Stag Industrial's future and understanding that they are a powerhouse of an e-commerce play, considering the fact that 40% of their portfolio actually deals with e-commerce fulfillment with clients like Amazon to FedEx. They just have an incredibly bright future, and I believe are going to deliver through on a very nice ROI. Now, analysts have those same expectations. Coming in at a median stock share price of $48 per share and a high stock share price at $55 per share. Now, until it actually reaches those high stock share prices, we're going to kick back and collect on Stag Industrial's dividend, with their current dividend yield sitting at 3.43%. Moving right along to our second stock that I picked up more shares of this week, we're talking about a fast food behemoth of a company. It is McDonald's, ticker symbol MCD. Now, McDonald's hardly ever loses steam, and let's face it, it's not going to be disappearing anytime soon. It is just a globally beloved fast food chain, and more recently, just given they've been facing not only COVID measures, but staffing shortages as well as wage inflation, their stock has certainly taken a bit of a beating, falling from $270 per share down to around $251 a share. That is about a 7% discount opportunity for all of us long-term value investors to pick up McDonald's. And just looking into their future as they continue to modernize all their restaurants and, more importantly, update their menu with plant-based products. Certainly the customers are loving it, and analysts are as well, coming in at a median stock share price of $281.50 and a high stock share price at $306 per share. So I went ahead this past week to pick up 1 more share of McDonald's for $250.19, now bringing my total share count to 2 total shares of McDonald's. Now, best yet is just collecting on their dividend. That's coming in at a current dividend yield of 2.17%. And last but not least, and right in line with my strategy of building a stronger and stronger investment foundation for myself for my longer term future, is investing in an entire slice of the pie by jumping into Vanguard's Total Stock Market Index Fund, ticker symbol VTI. Now, every single time the stock market becomes more volatile with that fear and uncertainty, I go ahead to double down on this particular fund, simply because we're talking about a fund with over 4,000 companies ranging from Apple, Microsoft, Google, Tesla, Amazon, United Health Group, JP Morgan Chase. You cannot go wrong with an investment like VTI, especially as you're just playing the entire market. It does pay out a nice quarterly dividend at around an average of 1.33%. So again, that ROI is there. Now, as the entire market slid, so too did this particular fund, falling from $231 a share down to around $220 a share, about a 5.6% discount for the long-term value investor. Now, I actually picked it up for an even cheaper price, picking up one more share for $216.70 as I dollar cost average my way into building a stronger and stronger foundation with VTI. Now, YouTube, that is it between Stag Industrial, McDonald's, and VTI, the three stocks I've been doubling down on this past week. Certainly let me know what you've been doubling down on. And if you like what you heard, you learned something new, drop those comments below. I'd love to read through them. Understand I'm not a financial advisor, so if you're going to make any of these investments and add them to your own portfolio, just do your own due diligence. Now, most importantly, tap on that thumbs up button and help me grow this channel. And if you haven't done so by now, go ahead and make your way to subscribing to the channel. I'd love to have you on this journey with me. Now, YouTube, until the next video, I will see you all there.